Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thanks to everyone listening in.
Ted, you gave me a little brief summary of what you'd like to talk about today, and it's entitled A Summer of Conflict. And the first item you mentioned, Biden moves to protect old Wall Street as he slides financial surveillance into the infrastructure bill via an amendment. But the fight, you say, has just begun. So what's going on here? Who's being spied on?
Well, we're picking up on our newsletter, which we put on Canadian Insider on the weekend, which is available for free under the Insights tab. It's Biden moves to protect old Wall Street. So just for a little context here, those who've been following U.S. politics will have heard that they're trying to work on a so-called bipartisan infrastructure bill that, you know, its purported purpose is to fix the bridges and tunnels in America, which I'm sure there will be some money for that. And there is actually a few billion for that, so there is quite a bit of money for that. That's without question. But of course, in any of these big initiatives, both in the U.S. and in Canada, politicians will try and tuck in little things that are their pet project. And out of the blue, last week came an amendment to this infrastructure bill about cryptocurrencies. And this wasn't an amendment to help build out the infrastructure for cryptocurrencies. It was an amendment to tax, to so-called increased tax enforcement of cryptocurrencies. And that's based off of a number of assumptions which are not really explained, but apparently if this amendment, gets eventually adopted, they will raise another $28 billion, which will help to pay for this infrastructure bill, which is $1.2 trillion, which the Congressional Budget Office says, well, actually, there's a missing $256 billion to pay, in terms of how it's going to be paid for. So they slipped in this crypto item. Now, who's they? Well, it was by a senator. However, as events unfolded, it was pretty clear that the U.S. Treasury had its hand in this. And effectively, what it would allow is basically for the Treasury to basically set out any rule it wants to force crypto actors to provide the Treasury with IRS data on basically every single cryptocurrency transaction. There was very narrow exclusions, but for the most part, anything that involved an exchange of value that was done for a fee would have to be reported to the IRS. So this was very wide sweeping, and it would capture everything from, yes, the trades on a cryptocurrency exchange, which no one in the cryptocurrency industry is opposed to. In fact, they've been asking for some clarification. But this amendment would require everything to be reported. So even, if you were to buy a cup of coffee with a Bitcoin, whoever's involved with that at the end would have to send the IRS a tax report. And so when we talk about surveillance, I don't think it gets any deeper and broader than that, the potential for that. And, so I think the White House and the senators behind the infrastructure bill were kind of hoping this would just, slip through and no one would really pay attention to it. And, these crypto this crypto industry, you know, they're kind of a bunch of geeks and they probably won't know what's going on. Well, that was a big miscalculation. Crypto industry fought back very hard within a number of hours, which was quite a feat for the industry because it's a decentralized industry. Yes, they do have some trade associations, which are relatively new. They're not like the established, you know, big business, you know, U.S. Chamber of Commerce, which I don't know how long the U.S. Chamber of Commerce has been around, but I'm sure it's been a few decades. This crypto industry is very new.
I was going to say, wasn't Ben Franklin the president of the Chamber of Commerce?
I think so.
Or one of them?
One of them. I mean, it's an established institution, but the crypto industry is very new, and so they weren't ready for this a week ago, but they sprung into action very quickly. And I don't think Capitol Hill, as an observer, you know, I don't have any skin in this game directly. Obviously, I'm a Canadian, and I don't have any political skin in the game in the U.S., but as an industry observer and as a participant in the financial markets, I have a huge skin in the game with everyone else and everyone listening to this interview. So they sprung into action very quickly, and I don't think the Capitol Hill and the White House knew what hit them. They got hit very hard with lots of representations from individuals, from individual software developers right to some very big players in the industry who, you know, made a lot of money in the industry. So, you know, of course, money talks in politics, unfortunately, you know, and that's just the way it is. I mean, that's why there are such huge established lobby firms in both Canada and the United States. And all of a sudden, a chunk of the senators said, oh, you know, we better fix this amendment. So they worked over the weekend, you know, God bless them. They worked very hard. You know, one thing I don't think you could ever accuse most politicians of is being lazy. You know, I know a number of them, and a lot of them work very, very hard. And so a group of both Democrats and Republicans worked very hard over the weekend to come up with a better amendment, one that would narrow the definition of who had to provide this information to the IRS instead of just, you know, any participant involved with a transaction, right? Okay, so they got Democrats and Republicans on side, but not all of them. But because of the way the procedures were evolving, to get this amendment through, you needed unanimous consent. So a new amendment came to the floor on Monday, and lo and behold, okay, they had basic agreement across parties that this was going to happen. But, of course, there's always one or two senators that have their own pet projects and their own pork barrel initiatives that they want done. And we had Richard Selby, who is an 87-year-old senator who probably knows nothing about cryptocurrencies except maybe from what he's heard, you know, from, you know, some of his peer group. He got up and he said, "Oh yeah, well I'll approve your amendment, but first you have to approve my $50 billion in pork barrel spending for the military." Now this is a $1.2 trillion package. They've already dealt with all sorts of spending, but here's this senator, 87 years old, not running again. Oh yeah, no, I won't approve it unless you approve my $50 billion. Well, this I think was a huge eye opener to everyone watching this procedure. Now, according to Charles Hoskinson, who is the co-founder of Ethereum and founder of Cardano, which is a cryptocurrency, he did a short video after this episode yesterday. There were so many people watching the live stream of the U.S. Senate that their servers crashed. This has never happened before. So a whole generation has been exposed to this nonsense that goes on in politics. This, oh yeah, I'll give you what's right for the country, but first you have to give me $50 billion for my pet projects. This pet project had nothing to do with the amendment. So the amendments failed. And so the crypto industry, on the one hand, looks like they lost, but on the other hand, this was actually probably a big week for them because it showed two things. One, they found out who their friends were and enemies were on Capitol Hill. And two, they sprung into action, and it was quite effective because you don't get senators working over the weekend to help you unless you have an impact. And they put together a very interesting coalition They had, for example, Democrat Ron Wyden from Oregon, who is not known to be sort of a pro-business type Democrat, but he's very concerned about privacy issues. And he said, no, you know what? He by his action here, he was saying no to the Treasury. This isn't on. No, you don't get to track every single transaction on the blockchain and put it into your IRS database. That is not on, right? So it was an interesting coalition. And although they failed at the Senate because of Richard Selby, they have another battle, and that's in the House because the legislation goes to the House. So this will be done all over again in a few weeks. So the big lesson, I think, from this is that crypto adoption is here. Otherwise, you wouldn't have had the Treasury be trying to move so quickly when they saw the opportunity to try to sneak this in. And that was one way of them dealing with it. But also the industry has come of age very quickly over the last few weeks. So we are into a new era. Now, let's bring this, circle this back to markets. I thought this was going to set back Bitcoin, Ethereum, and a lot of other altcoins. And they sold off a little bit on this Selby news, but they've rebounded. And although I don't believe Bitcoin's taken out its recent high, and it's nowhere near its all-time high. But some of the other altcoins have staged very very impressive rallies. Interestingly, there's an altcoin called Luna, which has its own network of smart contracts, and it's done very well here post Shelby, but it's focused primarily outside the United States. There are U.S. It does have U.S. users for sure, but I mean it's an Asia. It's come out of Asia essentially, the inventor of it, and it's being applied throughout the world. It's not the biggest blockchain by any stretch, but it is certainly I would call it one of the sort of the ex-US focused blockchains with a lot of very sort of nifty solutions. If, for example, it has a stable coin tied to the SDR, right? The United not United Nations, but the IMF's reserve. It was interesting. It's interesting to see that currency has rallied here. That's not a recommendation for that currency. I'm not making a recommendation. I'm just making an observation that it is done well post Shelby. Whether it continues to do well, we shall see. But no, Jimmy, it's been a very very interesting week in the cryptocurrency space, and big implications going forward. Because Jim, when it comes to people worrying about surveillance, I know you've got sort of there's an anti-vax movement. That a part of that movement is driven by worries about the government. What will they do with this biological network that they're setting up with the vaccine? But look, I can tell you right now, over the last week, you've seen the U.S. Treasury make their move in terms of what they want to do in the financial system. But this is right before anyone's eyes who is willing to look. And so, it's been a very revealing week, and it's also, in one sense it's worrying, but in the other sense it's also encouraging because you've seen that there are a number of hardworking U.S. senators who have said, no, we're going to find a better way to do this. So it's going to be a very fascinating contest in the House of Representatives when it comes to this infrastructure bill. And we will have to see how the chips fall in the weeks ahead. But it does have very big implications for the build out for cryptocurrencies if the Treasury were to prevail on this. I mean, they will continue to get pushback from the industry, I think, but it will potentially open up opportunities for jurisdictions like Canada and elsewhere to develop applications that don't require such onerous in some cases impossible reporting requirements. And that's why, when I say, that Biden moved to protect old Wall Street, well, some of the requirements that are implied by this amendment from the Treasury would make it impossible, basically, for these new technologies to emerge. And that would, of course, end up helping the oligarchs who, control the payment systems right now, the banks, the big banks, the big money center banks that are already established, right? It would support all of them. So, so while you had a coalition form on the cryptocurrency side, fight this. They're fighting an established coalition of sort of old school Democrats and big business Republicans, who really just want to keep things the way they are.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, the forces of deflation appear to be battling the forces of inflation, which was unleashed by the Fed. How can an investor profit from this conflict?
Well, that's another part of the summer of conflict, and it's very hard to profit from that because right now you've got competing narratives and data in the market. The narratives are based off of the data. For example, last week, we saw supposedly a blowout jobs report number, although that was thanks to seasonal adjustments. But okay, fair enough. The jobs numbers beat the expectations. But the jobless claims numbers aren't so hot. They're kind of stalled, around this 400,000 jobless claims. They're not going down. And we had the small business survey come out today, and it fell. It wasn't it wasn't inspiring. But, you've got the Fed out there saying, we're going to taper. A number of Fed officials are trying to, test the waters. We're going to taper sooner than you think. The economy's so hot, we're going to taper. And which means, they're going to cut back their asset purchases, which would tighten financial conditions. Well, you've got some people who are supporting that narrative and are saying, well, the Fed's going to raise rates, going to, eventually raise rates, so you sell gold. You want to sell gold on that because rates are going up. You don't want to buy gold. You want to sell gold, and we saw that on Sunday night, right, where somebody came in and dumped a bunch of futures contracts in the, Sunday afternoon. North America time. But, that's just, in my view, that's just positioning, people trying to use summer markets to get some momentum behind their narrative. But you know what? It's not working. I mean, we're in now for this tug of war between the deflation, camp that believes that the Fed is going to essentially tighten, taper, which would be deflationary, right? And so in a deflation, in that sort of context, initially, I guess, the thinking is sell gold and precious metals. But you can only take that argument so long because if there is a deflation, why would you sell gold, right? And we see this, in other corners of the market, they can't get any traction either. So you've got, for example, growth and value stocks have basically returned the same year to date. And especially in the past month, as of Tuesday, I was looking at the Russell 1000 value ETF versus the Russell 1000 growth ETF, and they're both up about the same over the last month, and they're both up, about 1.4%. Okay, so neither growth nor value have been getting any traction year to date. Gold tries to break out, it can't break out. And then it gets whacked. Well, now I got to believe it's towards the bottom of its range here. Could it go lower? Sure, it could go lower. Could silver go lower? Sure. But this is just people, I think, in the summer markets trying to get a narrative to break out one way or the other. I would say though that the gold silver ratio isn't looking very healthy right now. It's moved back up. Hasn't really broken out, but it's heading in the wrong direction. It's heading higher, so gold is outperforming silver, which is a bit of a headwind for the inflation camp. But look, this is the summer. We're just going to have to see how things play out. Let's see how the Fed responds if we get a few more weak data points in, as opposed to, it wasn't a blowout jobs number, but the better than expected jobs number. I know typically August is a disappointing month for jobs, and that will be released in September. So, we're just going to have to strap in here, I think, for this conflict between narratives and data, and it's going to be very frustrating, I think, for investors, So that's why we're taking a barbell approach, both what we call the economy stocks, which are geared towards sort of deflationary low interest rates, low growth. Because if the Fed were to make a policy mistake and taper and tighten, I think we would be headed towards that type of the economy, unfortunately. But we also want to have exposure to G economy, which are more inflation-oriented stocks, energy, precious metals, industrial metals, EV, metals, those types of things, So, we would take a barbell approach here, and that's what we've been writing about in our reports and in our stock channels.
Ted, thank you so much for chatting with us.
Jim, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.